Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. Today is December 15th, 2025. My name is Jesse Day, and before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. I've got two guests today. I'm very excited. We've got Shawn Khunkhun, CEO of Dolly Varden Silver, and Rick Van Nieuwenhuyse, CEO of Contango Ore. Both companies have announced plans to merge to create a North American-focused multi-stage silver and gold company. We're going to be diving into that deal, what it means for shareholders, and of course, discuss the current macro picture for both gold and silver. Gentlemen, it is great to have you both on the show.
Jesse, good to meet you, and pleasure to be here. Thanks for having us on.
Yeah, Jesse, good to see you again. Thanks for having us on.
Definitely. Let's start with discussing the silver sector. What an incredible year it's been, with the metal soaring to over $60 an ounce, about 63 and change as of the time of this recording. We're hearing the calls for triple digit silver growing louder. Do you think we could get there in 2026? And what are your overall thoughts on the current trajectory of the silver market, Shawn?
Yeah, listen, it's been a big year for silver. We started the year around $30. We're $63 at the time of this recording, so it's been a breakout year. The silver gold ratio is about 65 to 1 now. For me, it's been really a story of growing industrial demand. And one of the drivers for that industrial demand was solar. The photovoltaics was a game changer. We've seen silver go from 10% of industrial demand to about 55% today over the last 100 years, and it's really been picking up over the last decade or so. There's been a new development out of Korea, out of Samsung, where the EV sector is, with the silver battery, which is going to enable EVs to charge, in 9 minutes and go 900 kilometers versus the traditional lithium ion battery, which is about a 45-minute charge. So this is a game changer. And even just from a safety standpoint, if you try to move that lithium technology too fast, you run the risk of batteries catching on fire. So from a safety standpoint, and just from an ease, we're almost recreating the experience of filling up your gas tank in terms of range and also time. So, and this is happening today. And so if you look out into 2028, 2029, it's projected that there could be as much as 300 million ounces of demand just from EVs in an 800 million ounce market for mining. We're mining about 830 million ounces a year. This is a game changer. And so I think what's happening right now is, you've got investors flocking to both gold and silver. But what's really propelling silver's outperformance is this growing industrial demand. And I think that we really have to watch this battery development out of Korea and see how it impacts EVs. This could be a game changer.
Well, silver has now officially been declared a critical mineral by the U.S. administration, and China is now starting to implement soft export controls on the metal starting January 1st, 2026. It feels like nations are really waking up to silver's strategic value. Would you agree? And how do you expect this to affect both the supply and the demand side for silver? Shawn, I'll stick with you on this one.
Okay, yeah, look, the same day that China came out, or the same week at least, the U.S. government also added it to the critical list. You've had the Indian Central Bank consider bringing it into the monetary system at a 10 to 1 peg. So again, silver is now being viewed by many as something that is, we know it's the most conductive metal on the planet. We know how important it is in military applications, in this energy transition, and then with investors continuing to look for silver as a more cost-effective alternative to gold, we're starting to see that also put a lot of demand on the metal. Now, these are things that us in the silver sector and the silver centric companies have been talking about for 5 years. And, I made the comment a few years ago that, something like the zinc market, which was in deficit for 2 years before the price moved. You look into the early 2000s when car manufacturers moved to palladium from platinum. And we watched the palladium price go from $200 an ounce to $3,000 an ounce. What that would imply for silver is a $20 price having the potential to go as high as $3 if we saw that same type of demand come in. So it's an exciting time for investors. It's not something, that you can just put more capital to get more silver. Silver is produced primarily as a byproduct. So, how do you get a copper mine that, takes 30 years to go from discovery into production? If you're getting a big part of the metal as a byproduct, how do you increase that 830 million ounce mine supply? It's difficult and it's going to take time. And that's why I think these higher silver prices are here to stay.
Well, Rick, I'll turn to you now to discuss the gold sector. Much the same story as silver, but with some different tailwinds. All-time highs, of course, achieved this year, and the CIO of Morgan Stanley came out and recommended a 20% allocation to gold, 60% stocks, 20% bonds, 20% gold, a massive change to the traditionally recommended 60-40 portfolio. This is incredible given that most financial advisors generally don't even discuss gold. Do you think we're witnessing a paradigm shift? And how do you expect gold to perform in 2026?
Well, gold is money. And yeah, I think you're right. I mean, I don't even think anybody has 2% in their portfolio, except for a few select people who've been focused on gold who would be called gold bugs. I think the generalists are catching the flu, the gold bug flu, and they're seeing there as governments, and it's not just the U.S. governments, the governments around the world are addressing the imbalances by printing more money, and that results in inflation, where gold price increases always anticipate inflation. So we had the Fed do what we all expected it to do, which was reduce by 25 basis points, and that was geared into the market. But what kind of slipped through the cracks a little bit was the quantitative easing that didn't get called quantitative easing this time. They called it something else, but it's printing money. So it was only 40 billion, but we've seen this movie before. So the old solutions are the new solutions. Politicians don't get reelected by reducing somebody's access to whatever it is we promise them. So, and it's around the world. It's not just the U.S. It's Europe. It's Asia. We're in a world of where debt seems to be the solution to everything, and at some point that will come crashing down. But in the meantime, we have inflation, and so I think that's the story it's been the story this year. It's been the story for the last couple of years, and it's going to be the story for a few years to come yet. And the other thing I'll just mention, we talked about silver and its use in industrial uses, and the solid state battery from Samsung is a game changer, as Shawn mentioned. And once you build factories to produce solid state batteries, and they're better and they're safer than the traditional lithium ion battery, those are around for a while. There'll be new technologies that get developed, but when you invest billions of dollars to build a factory to produce solid state batteries that use a lot of silver, 50 to 100 grams more silver than the traditional battery, those have to be around for a while. They've got to pay for themselves. So I see this as a part of a cycle, and eventually, I'm sure there'll be other batteries that maybe won't use silver, or maybe they'll use something else. So, but this has happened. It's not like it's going to happen. Now it's been announced, and the capital is being directed towards building those factories. So, and similarly in the gold space, lots of talk about AI and AI investment and robots, and um, those all take silver and gold connections to happen. Because when you want a connection to absolutely happen, electronic connection, it has to be either gold or silver. You don't use copper, you don't use aluminum for those connections that have to happen. Like an example is your airbag deployment. That's a gold switch that makes that happen, because 99.99999% of the time you want that to happen. And that's a gold switch. So whether it's electronics in military aircraft or space rockets, or navigational systems, or AI robots, you're going to see more and more gold used in those applications as well.
Some great comments there, and you brought up the new QE. That is definitely something people should have their eyes on, which the Fed says, don't worry, guys, it's totally not QE. When they say things like that, you should probably be paying attention. I think they're calling it reserve management purchases or some Fed speak to confuse people. And of course, it's going to be temporary. We all know how temporary these type of things usually are. I want to talk about the gold mining sector for a moment. Obviously, it's been performing exceptionally this year as well, but at the current gold prices, many analysts believe that the equities, including the large producers, are still very undervalued at these levels. What are the main tailwinds you think are behind the sector right now? And what are the biggest challenges for CEOs such as yourself in running a gold mining company, Rick?
Well, we'll start with the biggest challenge is people. In any business, you need the right people to execute the plan. And one of the things I like about our direct shipping ore model is that it takes advantage of existing infrastructure. So that reduces the amount of capital exposure we have, and it reduces the timeline to get things into production with things like permitting. If we had started our Manh Choh mine, if we decided to build our own mill and tailings facility, well, for one, it would have cost about $500 or $600 million, and second, it would have taken at least 5 years to permit, and that's just being realistic in the United States to permit a new mill facility, a new tailings facility, and a power plant to run all that. Whereas taking advantage of the existing capacity at Fort Knox, we got it all done in 3 years, start to finish, producing gold, and it cost 100% of the project cost $200 million. Our share was about $65 million. So that's an order of magnitude less capital, much shorter timeline to get things into production. And it takes a lot fewer people. We have a dozen people in Contango right now. When we merge with Contango, with Dolly, we'll have, 16, 17 people. We're still a very small, tight group of people, but we're all experts. We all know what we're doing, and whether it's developing a mine or whether it's doing exploration, that combined team will be able to execute the plan, taking advantage of existing infrastructure, so we don't have to build new mills and tailings facilities. There are mills around that have excess capacity that we can use, and we take advantage of contractors. For example, at Manh Choh, the mining contractor is Kiewit. They're one of the biggest mining contractors in the world. So we have a few people at the site that manage the contractor, manages the mining process, but the 200 people that work at the mine are mostly Kiewit contractors. Similarly, the transportation, VGT, as a local truck transport company here in Alaska, it's their drivers that drive the trucks, and now there's an oversight role there for the Peak Gold joint venture, which is the joint venture between us and Kinross. But it's a half a dozen people overseeing that effort, so we don't need to have hundreds and hundreds of people working at an operation. We can use a lot of just good contracting, enter into good contracts, and then have good oversight on executing those contracts. So that's what I see as the biggest challenge is people, and that's one of the reasons we've adapted our model, direct ship ore model, to sort of address that in the world we find ourselves in, particularly for a junior startup company.
And just real quick, just your overall thoughts on the gold mining sector right now and how you see it positioned.
Well, somewhat similar to silver, there are more gold-only mines, but they're really concentrated in a few parts of the world. There's a bunch in Nevada, a bunch in Australia, but a lot of gold actually is a byproduct metal from copper mining. Copper, gold, big porphyry systems, copper systems primarily, but with a little bit of gold. But that's because they're such large scale operations, a little bit of gold actually adds up. So to a certain degree, you have the same issue facing trying to increase your gold production. It's a lot of capital. It's really permitting. That takes a long time, and the average is it's taking 15 years on average to get a new mine into production. And I'll give you a specific example. So I started a company called Nova Gold. We found the Donlin project. We defined what is essentially the same resource, 40 million ounces of gold at 2.2 grams per ton. So good grade, big. The only thing that's changed is the gold price has gone from about $400 an ounce when we found the thing to $4,000 an ounce. Here we are, literally 20 years later. They're still permitting it. So, meanwhile, I've gone off and formed 3 other companies that have all found projects. A copper company called Trilogy. We spun out the Lexco from Nova Gold that actually got the Keno Hill mine into production, and we sold it to Hecla and now Contango. So, meanwhile, Nova Gold's still sitting there trying to get its permits finalized. And so, yeah, these things take a long time. And so you don't just turn up the tap and flip a switch and you get more gold production. And it's even more exaggerated in the silver space for the reasons I think Shawn mentioned. It's just there are very few primary silver projects, and so if you're a byproduct of lead zinc operation, what drives you don't increase double the size of the mill capacity because you're going to produce more silver. If you're a zinc operation, it's based on producing more zinc, which means you need more zinc, and right now we're not in that market.
Well, let's now dive into the big news. Dolly Varden Silver and Contango Ore are set to merge. Walk us through the reasons why you're making this move and how it will benefit shareholders of both companies. I'll put this question to both of you. Shawn, I'll go to you first.
Okay. Also, I'm going to speak for Rick here. Rick's company has become a dominant player in Alaska. And, he's built a wonderful company with some great assets, and he had a very, very solid 5-year plan. He's got production, he's got the Lucky Shot, which is also going to get into production, and then he's got the Johnson Tract for future growth. And he really laid out a plan for his shareholders, a path for 200,000 ounces of production. What bringing Dolly Varden into that portfolio it does a number of things. It keeps in the high grade, geographical, consistent area. On your last question, what are the challenges? In the previous cycle, gold mining CEOs, they went after sub-gram deposits. Contango staying very disciplined, looking for high grades, and as Rick talked about, looking for that DSO model, where you can get projects into production within a few year time frame. So Contango is going from a solid 5-year plan to a 20-year plan by bringing in the Kitsault Valley. So it's bringing in a lot of silver, it's bringing in a lot of future growth, and there is some consistencies between the Johnson Tract ore and the Kitsault Valley ore. They're both high-grade, sulfide-rich deposits on tidewater. So for Contango, it's 5 years to 20 years. For Dolly Varden, we've got a very, very high-grade silver and gold project in arguably one of the richest gold mining camps on planet Earth, the Golden Triangle. We're getting exposure to cash flow. We're getting exposure to a pipeline of projects and a management team that's driven a lot of value, whether it's the Nova Gold, which is now trading at $6 billion, which Rick was the founder and CEO of, as he mentioned. He mentioned Trilogy. So it's coming together with a group that can take a discovery and can move it into production. So that's the rationale. Now there's some other things that come with it. We're in a market where there's a lot of passive investing. 58% of capital in today's world wants to go into the liquid ETFs and the indices. And by coming together, and again, we're going to be about an $800 million market cap on Merge. We're factoring in about $40 to $50 million of buying from those said ETFs and indices. So we're going to attract more capital. We're going to be a more liquid vehicle. We're modeling about $10 million a day of liquidity. We've got two wonderful shareholder bases that complement each other. So you've got some silver-oriented investors and you've got some gold-oriented funds. They're coming together and we're getting the best of both worlds. On Rick's side, you've got Franklin, GDXJ, Alieska. We've got Silj, Eric Sprott, Hecla. And then I do think you've got two complementary teams. Whether they're young explorers or capital markets professionals and seasoned mining veterans who, again, can permit projects, can move them forward into production. So that's the rationale as I see it. I don't know if there's, Rick, anything you want to add?
I'll just say, I think one thing to add is that, we want to be the go-to stock for gold and silver. And if you're an investor and you want exposure to North America, you want high grades, meaning high margin, then you've got a couple of choices. If you want exposure to both gold and silver in that space, safe jurisdiction, it's basically Hecla. And Hecla is a great company. It's been around about 130 years. It's a $10 billion market cap. We're sub $1 billion when we come together, and we've got that growth profile. So, we've got that alpha that the investors are looking for. Hecla's a great company, and they're a significant shareholder. They support the transaction. We're looking to be an alternative investment to Hecla, but at an earlier stage and with that growth profile.
And Rick, as it is the first time you've been on this show, could you provide us with an overview of Contango Ore, your projects, and how this merger with Dolly Varden will add value on your end?
So it all starts with the discovery at Manh Choh. It's a 1 million ounce gold deposit, roughly 8 grams per ton as per the feasibility study, which was done at $1,400 gold. I'll point out, not that long ago. So we as I mentioned earlier, we came to a decision: do we build our own mill and tailings facility, or do we take advantage of the existing infrastructure at Fort Knox? That Fort Knox had been operating for about 10 years literally at half the mill capacity, and that was just a constraint of the ore body, because there was only so much ore that they could access. It was an open pit, and it had been around for that time about 15 years. So we went to Kinross and we came together and formed the joint venture and got production very quickly. And nothing happens super quickly in the mining business, but 3 years from start to finish to get operations underway is very quick in the mining sector. So we then recognized, well, this works as a business model. What do you need to make that work? You need high grades, and you need to be close to infrastructure, and yet your mine itself, which is basically a quarry operation, if you're not milling and disposing of tailings on site from a permitting standpoint, it's a quarry operation. So looking for projects that have high grade, that are close to existing infrastructure, and are relatively simple to permit. And that includes things like being above the water table. If from a permitting standpoint, if you're above the water table, it's a lot easier to permit things than if you're below the water table and have all that water to deal with. So Lucky Shot fit that to a T. It's not the biggest mine in the world. It'll produce, we think it'll produce on average about 50,000 ounces of gold a year. It's going to take about $50 million of investment, half of that basically in drilling and defining a reserve of roughly quarter million ounces. But then we can, ramp up production in the second year, starting maybe 30,000 ounces of gold production, then ramping up 40, 50 as you get more stope development in place. So again, simple, We're guiding towards about a $1,500 all-in sustaining cost. And so if you've got a $3,500 gold price, that's a $2,000 margin. So if you're producing 50,000 ounces, that's $100 million of additional cash flow. Manh Choh is generating $100 million. This year we'll finish with about $102 million in distributions from the joint venture. So and that we'll have that consistency for the next 3 or 4 years out of Manh Choh. Johnson Tract, we acquired High Gold last year. I think it was about July it closed. Beautiful asset, about another 1 million ounce gold deposit, and very good grade. It's 9.4 grams per ton. It's a gold equivalent grade, so it's gold, silver, copper, lead, zinc, and that's where I really see the synergies with the Kitsault assets. Is they're same metal mix, little higher on the silver and lower on the gold overall, but the copper, lead, zinc is there as well, so they can go through the same, have similar metallurgy, similar recovery characteristics, and that's where we really see the synergies between the two companies is that overlap and the style of mineralization. And of course, Johnson Tract has lots of exploration upside. Next summer we get underground there, and we get the road built to get over to the proposed tunnel site. We've been working with the state of Alaska to get the permits to get the tunnel going. We expect those in Q1, so next summer we can mobilize the equipment, get the road built, mobilize the equipment in, and start on the tunnel. And meanwhile, at Kitsault, we'll have a big exploration program, 50,000 meter program there, and we're just generating a lot of catalysts between the 18,000 meter drill program at Lucky Shot, constructing, building infrastructure, building the road to the portal site at Johnson Tract, and 50,000 meters of drilling at Kitsault. So very catalyst-rich environment. Lots going on.
Well, let's talk about the combined cash position of both companies and the strength of the balance sheet once the merger is complete. How much cash will be on hand? How do you plan to put it to work? And how much runway will it give you, Rick?
So combined company we'll have about $100 million of US in cash. Basically, we'll have about 25 million spent at Lucky Shot next year doing the drilling, the 18,000 meter drill program I mentioned, and about $20 million at Johnson Tract building the road and mobilizing equipment in to start the tunnel and upgrading camp for wintertime operations. And then the 50,000 meter program at Kitsault, that's about 30 million Canadian spend there. And I think part of that money will direct it to upgrading the road that connects the coastline at Alice Arm there up to the Torbrit mine. And, so we can start to think about how we would develop that initial project on what I call that string of pearls going up the Kitsault Valley, with Homestake up at the top and Kitsault down at the bottom. So a lot of news flow and a lot of catalysts, and so we have 100 million starting, but then keep in mind we've got that 100 million of cash flow coming from continued operation of the Manh Choh project. So it's self-funded. We don't need to go out and raise money. It's going to be a well-financed company. The one thing I'll say we are on the hunt for is we've got a couple of different options we're looking at, mills to either get a tolling arrangement with or perhaps even purchase, so that if we purchase a mill, we would combine our DSO model with a hub and spoke approach. And so and we do see other opportunities beyond just the two companies coming together. We see other opportunities out there that could fit this DSO hub and spoke model.
Fantastic. Shawn, I'll turn to you now to discuss the main catalysts that shareholders can look forward to after the merger is complete as we move into the new year. What do you got for us?
Yeah, so as we get into January, we're initially going to be putting out more drill results from the 56,000 meter drill program at the Kitsault Valley. So that'll be the first thing that's on deck. We've got the special general meeting for the shareholders to vote on the transaction. So going into the transaction, both companies have about a third of their shareholders who've indicated either through voting support agreements or verbal commitments to vote for the transaction. The transaction should close in March, and CTGO will be Contango will be the go forward company, Contango Silver and Gold. It will not only trade on the NYSE American, but we will also keep Dolly's venture listing and will apply for an upgrade to the big board on the TSX. We're factoring in with the combined company about $50 million of ETF and indice buying. So that'll come in. There's a 18,000 meter drill program at Lucky Shot that'll be generating, what I think will be some high impact, high grade gold results. We'll be simultaneously launching into a new 50,000 meter drill program at the Kitsault Valley, and we'll be putting out a new 43-101 where we've been guiding a 50% increase to silver ounces. So there's, with 70,000 meters of drilling amongst the portfolio, ongoing production numbers, it should be a very, very catalyst rich 2026 for the company.
Excellent. I want to end by opening the floor to both of you. Is there anything we haven't yet discussed or anything you think it's important to emphasize about the merger of Dolly Varden Silver and Contango Ore? Shawn, I'll start with you.
Yeah, Rick touched on, creating a go-to must-own precious metals company. I think, for investors, I'm an investor, Rick's an investor. You want to trust the people. You want to be in a safe jurisdiction. We're offering high grades. We're offering a Hecla alternative, right? Hecla's a great business. I don't know a lot of businesses that have been going for over 130 years. That's a very special proposition to give your shareholders. And so we're building, a company that has arguably got better projects in terms of the grade, mineral inventory. We're building a rocket ship. And, there's a revaluation that should occur in the first half of the year. Once the merger's complete, the ETFs come in, and we can continue to deliver positive news flow. And then both of these companies, as they were growing the last 5 years and becoming dominant in Alaska and the Golden Triangle, what other opportunities can we bring in? Processing facilities, other assets, and continue to grow on this platform. It's pretty exciting, and size matters in our industry, and this is now it's becoming a top 5 North American developer.
And Rick, what else should people be focused on when it comes to this merger?
Well, I'm an exploration geologist by background, and so one of the things that really excites me is we've got 4 mineral districts that we put these two companies together that we'll be exploring in. And we both have demonstrated track records of solid exploration. We've been doing this a long time. I think I'm excited to get the 2 exploration teams together and get some cross-pollination going, talking about different ideas. But having exposure to 4 districts that have a demonstrated track record of producing high grade gold and silver, that's very exciting, and I think that should be exciting for investors as well.
Great. Well, I'm going to put a link in the description to both the Dolly Varden Silver and Contango Ore websites and social media profiles so people can follow along in anticipation of the merger. I'll also put a link to the official press release. Gentlemen, it has been an absolute blast. Thank you so much for coming on the show.
Jesse, thanks. Great to be here. My first time, but I've really enjoyed the discussion here.
Yeah, Jesse, thank you so much. Merry Christmas, all the best to 2026, and we look forward to coming on and continuing to share news with your audience.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.